joining us, but I think the numbers the additions seem to have dwindled, so we'll crack on. Welcome everyone. Welcome to Infometrics Monthly Economic Briefing for September. I'm Rob Hayes. I'm an economist at Infometrics, and I'm joined today by Paul Barkle, one of our other economists.
Hello, everybody.
I'm sure those of you with kids, you'll be thinking ahead to the school holidays that are coming up soon. At Infometrics, we've been looking back over the last kind of 5 or 6 months at what's been happening in the labour market, and thinking ahead over the next couple of years as to what's going to happen, and that's going to be the focus of today. I'm going to talk for, I don't know, about 20 minutes, looking back at some of the data that's come through on the unfolding labour market dynamics of the COVID economic downturn. I'll look ahead a little bit over the next couple of years, and then Paul's going to come in and talk about something which is really vital to how the labour market is going to shape up over the next few years, which is the migration story. So I'm going to, just a little bit of housekeeping. For those of you that have joined us before, you'll know this, but if you could keep any questions to the Q&A section, and rather than don't put anything in the chat section, that makes it easier for us to keep track of who's asking questions. And there should be about half an hour time for questions in the second half of this webinar. So I'm going to share my screen with you. Here we go, the unfolding labour market dynamics of the COVID-19 economic downturn. I'm going to start by talking about what happened in that June quarter household labour force survey. We've had a number of clients come to us asking us questions such as, how is it that unemployment actually fell, particularly when we've been talking about rising numbers of job losses over the next, certainly in the last few months and in the next few years as well. How is it that we got it wrong, and how is it that unemployment managed to fell even during the time when the country was in lockdown? Well, we think we've got an explanation. What I've done in these boxes is trying to explain to you the different components of our labour market analysis, and I'm comparing here the March quarter from the household labour force survey and the June quarter from the household labour force survey. The HLFS is an important statistical output from Statistics New Zealand. It gives us the official unemployment rate. It gives us our kind of official numbers of what's happening to employment, but it also gives us a much more kind of rounded view of what's happening in the labour market, because you have to look beyond what's happening to unemployment and employment, and that point is more relevant now than it's been for quite some time. Because what we think happened between those two quarters was that employment fell by about 11,000, but unemployment also fell by about 6,000. Now, to be classed as unemployed in the household labour force survey, you have to be actively seeking work and available for work. And we think that what happened was, in that June quarter, people who were losing their jobs were looking around them. They were looking at most of the country, if not all of the country, was in lockdown. And they probably said to themselves, what's the point of looking for a job? So rather than those people being classed as unemployed, they said that they were available for work but not actively seeking work, and so they would have been counted as available potential job seekers, and that would have placed them in a group called people not in the labour force, and those people rose by 36,000. Almost the same number as that fall in employment and unemployment. All of those people went into people not in the labour force. And as I say, they were mostly people who were available for work but not seeking work. People not in the labour force can also include people who are not available for work, but who are seeking work, as well as people who are neither looking for work or available for work. So it's a relatively large group of people. And when you're thinking about how many people are going to be unemployed, when we start talking about where we think unemployment is going to go in the next couple of years, you have to consider the difficulty. You can't just consider the number of job losses. You have to consider how many of those people losing their jobs are going to stay engaged in the labour market, who are going to continue to seek work and be available for work, as opposed to people, the economists call it the discouraged worker effect, those people who lose their jobs, become discouraged and stop looking for work and stop making themselves available for work, and therefore enter this group of people not in the labour force. But we'll talk about that a little bit further along. But hopefully that explains why unemployment fell in that June quarter. We think that looking ahead to the September quarter, with most of the country out of lockdown, yes, we've had that resurgence of cases in Auckland, but I think in the September quarter, with most of the country out of lockdown, a lot of those people who said that they were available for work but not seeking work will start to seek work again. And so we're expecting the unemployment numbers to start rising as those discouraged job seekers enter the labour force again and start to be counted as unemployed. Let's look a little bit more detail at that fall in employment of 11,000 people. We reckon that based on what's come out of the household labour force survey, about 90% of those were female, about 3/4 were aged between 15 and 24, and a quarter were aged 55 to 64. So those job losses really hitting those younger age groups and those older age groups. We think that approximately 3/4 of those job losses were casual workers, and perhaps about a quarter were fixed term workers. And I think this is a reminder that particularly when you're comparing consecutive quarters in the household labour force survey, you can sometimes pick up seasonal changes. And so, as many of you probably already understand, that the seasonal employment, particularly in the harvesting, in the primary industries, a lot of that employment would have come to an end around April. And so we think that a lot of those casual workers that lost their jobs were probably people working in those primary industries on casual contracts, picking fruit, basically. So although COVID is the main game in town, it's not the only game in town. The economy, in many respects, is continuing to function as it normally functions, and there's a lot of seasonality in these numbers. As you would expect, the number of people employed who were without post-school qualifications fell. There was actually a slight rise in the number of people employed with degree or higher qualifications. And again, that really hits home the fact that job losses, when the economy is not doing so well, job losses tend to fall on those people with lower qualifications. Now, not just putting aside that fall in employment, we also know that full-time employment fell between the March and June quarters, and part-time employment actually rose. And we think that has something to do with perhaps partly those seasonal effects, but also employers cutting people's hours as a way of trying to avoid job losses. So cutting back on their labor costs by cutting hours rather than laying people off. And that comes through in the number of hours worked that fell by just over 10% between those two quarters, whereas the paid hours worked fell by only a fraction of that, by about 3.4%. And we put that down to the wage subsidy scheme, the wage subsidy scheme supporting people and paying some hours that people weren't actually working. Now, a result of that reduction in full-time employment and a reduction in those hours worked was an increase in the underemployment rate, which is the number of people working part-time who will actively seeking to work more hours as a percentage of the employed. And that rose from 3.4% to 4.6%. So you can see I looking at those different employment numbers, it starts to tell a story. It starts to, they kind of start to match up with each other. And when you combine them into one narrative, that they tell a story of people having their hours cut, people losing their jobs, and those people who are losing their jobs becoming discouraged and deciding not to look for work, at least in the last few months. Now, I'm going to shift the emphasis a little bit. I'm going to talk about a different data set now. This is the monthly employment indicators that Stats New Zealand have been releasing on a monthly basis. This is just focusing on people who are employed, and it's specifically employees. It doesn't count the number of people who are self-employed. But what I've done here is look at the number of people employed by gender. So females at the bottom here, the dark blue line, and males at the top, this orange line. And what you can see with this data is how that employment has changed month to month. You've got the peak in March, just as the country was going into lockdown. You've got the fall between March and April because of that level 4 lockdown, and we've seen some kind of a recovery in the subsequent couple of months, and then a slight tailing off in July. Now, when I first looked at this, and I was remembering what I just said about the HLFS showing that 90% of that employment fall between the March and June quarters was female, I said, well, that doesn't look right here. What we're seeing here, we can clearly see a fall in male employment here. Maybe it wasn't quite as steep as the fall in female employment, but there's obviously a lot of men losing their jobs. But then if you try and match up this data with the HLFS, they are actually telling the same story. So the HLFS, the March quarter data, was the product of surveys that were being done in January, February, and March. So it's across the whole 3 months. Same with the June quarter, it's surveys of people done in April, May, and June. So I tried to kind of change this data to make it a little bit more like the HLFS. I took the average employment of males across those January, February, and March quarters. Same for the April, May, and June quarters. Same for males and same for females. And you can see the comparing this dotted line here with the dotted line here. This is basically comparing the March quarter and the June quarter. And you can see when you average across those months that male employment did fall only a little bit, whereas female employment fell by a lot more. And so based on this data, we would say that between the March month and the July month, that 57% of those job losses were female. Employment as a whole fell by 30,000, just over half were female, and approximately 3/4 of those people losing their jobs were 15 to 24-year-olds. So that age profile kind of stacks up. We're getting some consistency between what we're seeing in the HLFS and these monthly employment indicators. But because these monthly employment indicators show us month-to-month changes, there are some subtleties in there about the differences between genders that we're not getting from the HLFS. Let's just look at those age breakdowns in a little bit more detail. So these are those monthly employment indicators. Again, I've compared employment in March 2020 with July 2020, and I've broken it down firstly into age groups, but also by gender. And you can see here that it's a really kind of a stark picture, the fall in employment among 15 to 19-year-olds, around kind of 5,000 for both males and females, similar for 20 to 24-year-olds. Among 20 to 29-year-olds, fall in employment of about 2,500, again for males and females. And then you look at this older age group, the 65 plus, you've got similar numbers for males and females, about 1,500 females and about 2,000 males losing their jobs between those 2 months. Now, just kind of harking back to what we said about males and females over those few months as a whole, and we said that fewer males lost their jobs over that period. I think what's happening here is that you've got big job losses among these younger age groups, similar numbers between males and females, same with this 65 plus. But those overall male job losses were offset by some job gains among some of those prime age groups among males. So 30 to 34-year-olds, 30 to 35 to 39-year-olds, and that 40 to 44 age group, there's actually been an increase in the number of males employed of more than 1,000, looking more like 1,200 there. So that's what's happened. That's why this fall here that we saw between March and April, and perhaps the recovery, that's why it's not as acute among males, because the job losses in those younger and older age groups were offset by job gains in those prime working age groups. Looking now at industries, same data set, and I think there are some clues here as to what's happened in some of those age groups. So again, we're comparing March and July employment, and we're breaking those job losses down into industries. So you can see agriculture, forestry and fishing fared the worst, with something like 9,000 job losses. And we're putting that down to that loss of seasonal employment, basically the end of the harvesting period. But we've also got some big job losses in administrative and support services. We're looking at that, and we can't break that down into its sub-industries, but we think that's probably travel agents and maybe employment agencies. Obviously, travel agents don't have a great deal to do at the moment with Kiwis unable to travel abroad, and employment agencies are also going to be struggling to find work with many industries in free fall in terms of job numbers. Also got industries like transport, postal and warehousing suffering job losses, partly because of lockdown, but also because of the size of the economy contracting. As many of you will have heard when the GDP numbers came out recently, New Zealand is officially in a recession. It's had 2 consecutive quarters where the economy has contracted. So industries like transport, postal and warehousing that basically service the whole economy, they tend to contract when the economy is contracting. Education and training, those contractions, we're putting that down to the fall in the number of international students. Manufacturing, we think it's more non-food manufacturing. Our food exports, our processed food exports seem to be holding up pretty well. And accommodation and food services, I was expecting the numbers to be higher here. We've said from the start that particularly the lockdown, where a lot of those a lot of that industry wasn't able to operate, but then the fact that we don't have international tourists visiting New Zealand at the moment, that accommodation and food services would be hit particularly bad. It's not as bad as we thought it would be. I'm going to dig into that in a little bit more detail in just a moment. I'm just going to take your attention here to some of those industries where we've seen employment rising. Public administration and safety, we're putting that down to basically the government's response to COVID-19. So, for example, a lot of the work, a lot of the people that have been brought in so chasing those people to do the testing and then chasing up the people who have been tested positive. There's quite a big kind of workforce built up, and I'm going to call it the COVID infrastructure. There's a lot of infrastructure built up around that that's creating jobs for people. Same with healthcare and social assistance, although we'll see that there have been some job losses in that area. I'll dig into that in a little bit more detail in a moment. But construction, I'm putting this growth in employment of males in that prime age group, I'm putting that down mostly to the job growth that we've seen in construction. There was a loss of jobs during lockdown, but construction, perhaps more than any other industry, kind of really came out of lockdown at a fair rate of knots. I think there was probably a little bit of backlog of work that came through during lockdown. So consents, there was a backlog of consents that have come through. And we're also hearing on the ground that people perhaps who saved money during lockdown were able to kind of do some home renovations. And then there's just the usual kind of flow of construction work that seems to kind of just continue unabated after lockdown. So construction is a male-dominated industry. Public administration and safety is about 50-50 males and females. So some of that growth in the male employment could be in public administration and safety, maybe a small number in healthcare and social assistance, although that does tend to be female dominated. But I think largely it's that growth in construction that has made the picture of male job losses look much healthier than females. So let's dig into some of those employment numbers a little bit more, those industry employment numbers. This chart here is looking at month-to-month changes in employment in some of those industries that I think are important to look at. So for example, this orange bar here tells you that in administrative and support services between February 2020 and March 2020, 5,000 jobs were added. If the bars are below the zero line, that's obviously job losses. And I'm showing you this because it's interesting to see the timing of job losses and job gains over the last 4 months. So you can see in agriculture, forestry and fishing, there was a big loss of jobs during April. Now, I was scratching my head about this for a little while because a lot of that industry was able to operate during lockdown. So we're putting this down to that cessation of the harvesting period. If any of you guys listening have a different perspective on that, I'd like to hear it. And as expected, accommodation and food services also suffered during lockdown because many of those businesses were not able to operate. But in subsequent months, there has been a little bit of job growth in accommodation and food services. It does seem to have tailed off in July. But that job growth in May and June, perhaps because people did kind of hear the call and take some domestic holidays. We know that a lot of operators saw a bump in spending during those school holidays. Those job gains in May and June did help to offset the job losses in April, and that's why when we looked at the chart earlier, those job losses across accommodation and food services between March and July were not quite as severe as we might have expected. Same with agriculture, saw some small job gains in May, but worryingly, we've seen further job losses in agriculture in June and July, and we're going to be watching that carefully to see how that plays out, because we know outside a lot of the main centres, a lot of regions are dependent on their primary industry to keep them going when a lot of other industries are stalling. And then administrative and support services, we talked about some of the job losses there were really high. They fared pretty well during lockdown, even saw some job gains during May, but we're seeing some significant job losses in June and July, and that's why when you kind of total up the change between March and July, administrative and support services is second only to agriculture. Just going to turn now and look at some of those industries that saw job gains between March and July. And you can see what happened to construction, a contraction in employment of about 1,500 during lockdown because a lot of those businesses weren't able to operate. But I said that construction came out of the traps in May with a real head of steam, job growth of 3,500 people, most of them males, I would think. Some further job gains in June and some weakening in July, and we'll be watching those numbers very carefully. Healthcare and social assistance, a lot of job losses during April. I was a little bit surprised at that, and I think probably it might be job losses in those perhaps less acute, less urgent areas of healthcare, maybe some of those some of those more elective areas of healthcare that just weren't able to operate or just weren't seeing the same kind of demand during lockdown. But job gains since then, and I would see that as that would be a response to COVID, with those areas of the health system that are dealing specifically with COVID, kind of ramping up their workforces over the last few months. And then that public administration and safety, rising numbers of job gains, as I said, as that infrastructure that New Zealand has been putting around COVID, so the testing and the chasing up people, the chasing up the contacts of people who've been tested as positive, that infrastructure has been building up over the last few months. And is probably kind of where it should be at now in terms of what you need from a national response to a pandemic. I know a lot of you are interested in what's happening across the regions. This picture hasn't really changed very much in the last few months. So again, comparing March to July, in absolute terms, as you would expect, the most number of job losses in Auckland, quite a significant number in Canterbury. We think that is partly COVID, as you would expect, but also employment was falling in Canterbury anyway because the rebuild has been pretty much completed. A lot of the people that were working there on the rebuild are now moving elsewhere. Otago's a region of different things happening in Otago. You've got Dunedin, which is showing a lot of resilience in our data, but obviously you've got Queenstown in particular, which is being dragged, which is kind of contributing quite a lot to those job losses. And then you've got regions like Hawke's Bay, Gisborne, Bay of Plenty, which in proportionate terms are not doing quite so well, particularly Hawke's Bay, 4% job loss, Gisborne 4%. That probably has something to do with those seasonal employment effects that we were talking about earlier, and we would hope to see job losses in those regions stabilize in the coming months. So that's a retrospective. But we've been thinking a lot about what's going to happen in the next couple of years as these labour market dynamics unfold. And in our July forecasting round, we were picking employment between the June quarter this year and the September quarter in 2021 to fall by just over 250,000. Now, I spoke to our chief forecaster about this yesterday, and certainly in the last few weeks, the job losses seem to have begun to stabilize. I think there's still a lot to play out, particularly with the wage subsidy to come off, having just come off in the last few weeks. We do think there are going to be more job losses yet to play out, but we are more optimistic even in just in the last few weeks. So that 9% fall in employment probably looking more like 7% on our current estimates. But based on our July forecast, we thought that unemployment might rise by an additional 95,000. Now we're looking at probably a rise. We think that unemployment will actually rise by even more. We're more optimistic about the employment outlook, but we think that conversely, if job losses are not as bad as we think they're gonna, as we thought they were gonna be, that more people who lose their jobs will maintain their engagement in the labour market. So we're thinking that fewer people will exit the labour force and more of those people will remain unemployed and continue to be seeking work and continue to be available for work. So although our view of the labour market has shifted to a more optimistic setting compared to what we're showing you these numbers here, we do think that although employment will fall less than we were anticipating, we think unemployment will rise by more, perhaps by more than 120,000 actually, because more people will be encouraged to remain engaged in the labour market. So back in July, our forecasts were saying that the unemployment rate would peak at just under 10% towards the end of last year. I don't want to kind of foreshadow what we're going to say in our next forecasting round, but it will probably be it'll probably be higher than that because of that discouraged worker effect that I talked about. Now, I'm going to pass over to Paul in just a moment. Paul's going to talk about how migration is going to impact the size of the working age population. But I just want to leave you with a few kind of big numbers about what's going to be about the dynamics of the labour market over the next few years. So if past is prologue, if past tells us anything, and it generally does, about 120,000 people are going to leave school in the next couple of years. 220,000 people will complete a tertiary qualification at a tertiary education provider. 60,000 people will complete industry training. 20,000 people will complete an apprenticeship. So that's a lot of people who are going to be entering a labour market that is probably going to be in worse shape than anything we've seen in the last 10 years. Add to that the number of people who are going to be losing their jobs. There's going to be a lot of people displaced. We know that in the next few months, a lot of people working in those regions where the primary industry is really important. A lot of people are quite concerned about how many people there are going to be available for the harvest this year. It might be that people are losing their jobs in one region of the country, but particularly those seasonal jobs will exist in different regions. So are we going to see a migration of people between regions moving to where the jobs are? That's not an easy thing to ask of people, particularly those people that own their own homes. Moving regions, moving their family is not an easy thing to do. There is going to be a lot of displacement in the labour market. There is going to be a lot of change in the labour market, and that change is going to happen relatively quickly. Okay, I'm going to pass you over to Paul now, who's going to talk a little bit about migration.
So, thanks, Rob. Hi, everyone. So I'm Paul. I'm an economist at Infometrics. And as I'm responsible for our migration forecasts, I thought I'd just talk a bit about them and how they're kind of a main driver of population growth, and consequently how that impacts the working age population, just because it's kind of important to understand how the working age population changes and how that will impact the labour force. So when we're looking at net migration, roughly 75% to 80% of net migration is within the working age population. That's pretty similar between arrivals and departures. A slightly higher share of departures fall into the working age population. It tends to sit just above 80%, and we sort of think that's largely due to sort of people getting their qualifications and going on their OE and sort of seeking better job opportunities and life experience elsewhere. Where sort of when we're looking at arrivals, around somewhere between 75 to sort of 78% tend to be in the working age population. So obviously net migration has a massive influence on how the working age population changes over time, and also how we have skills needs and skill shortages into the country. So roughly, according to Stats New Zealand data, roughly 20% of these arrivals come in on work visas. And from the MB data, we can look into that a little bit closer, and we see sort of 40% of these people on work visas are either skilled or highly skilled workers. When we looked back to last year, we had roughly 22,000 highly skilled visas. We have another 20% of the migrant arrivals come in on visitor visas, and a lot of these visitor visas then turn into work visas. But so with these work and visitor visas, these are foreign arrivals, and with the borders closed to foreign arrivals, we'll no longer see these people coming in, and we may sort of result in skill shortages looking forward. But we have it is important to note that we did have a massive inflow of migrants coming into New Zealand sort of late last year, early this year. We had 35,000 people come in the March 2020 quarter. That's just estimated, of course, and 25,000 in December. one thing I would just like to point out about that is that it is quite possibly an overstated figure. The way how migration works is that Stats New Zealand uses what they call a 12-16 rule to be classified as either a migrant arrival or a migrant departure. You need to have been within the country for 12 of the last 16 months, which means that it takes at least sort of 12, somewhere between 4 to 16 months before we know whether a visitor who comes into New Zealand, whether they're likely to be classified as a migrant or not. And so because of that is why it's quite possible that that high 25,000 figure in December is slightly overstated. We normally have a lot of arrivals over summer. This is coming in for seasonal work, for holidays and things like that. But in normal times, the majority of these would then leave as summer ends and then be classified as just a short-term visitor rather than a migrant. But as the pandemic hit and borders closed and we saw lockdown and things like that, a lot more people have stayed in the country. And because they've stayed in the country for longer, the probability of them being classified as a migrant arrival is much higher. Another thing impacting that, the visa extensions that the government has been announcing. This will be affecting 19,000 of those short-term visitors, just to give them time to leave the country without being sort of stuck here because the limited capacity on overseas flights and things like that. And because of these visa extensions, while I previously said we believe that 25,000 in December is overstated, those extensions make the possibility of them sort of becoming a true migrant is much higher. But on the converse to that, as the visa extensions sort of come to an end, sort of February and March, we're likely to see sort of a massive exodus of all of these people leaving the country. So yeah, if we do accept that high migration figure to be true, sort of December last year, then we're likely to have very high migrant departures in quarter 1 of next year. And just sort of looking forward to how we expect migration to unfold going forward. We're expecting very, very weak migration over the next couple of years, largely due to those border closures. And we've sort of seen less Kiwis coming home in recent months. We've had a massive inflow at the start of the pandemic, but it's really dried up since then as we've got into the later years. In Q2, Stats estimates there was only 777 net migrants for the whole quarter. And just to sort of talk a little bit about our forecasts, we're kind of expecting migration to sort of stay below 10,000 somewhere between from 2022 up until 2023, and don't expect sort of things to start to return to the sort of historic averages until around 2024. And so with that, we're expecting much lower migration, and as a result, the working age population to stay. So for the growth in the working age population to be limited and sort of see a lower working age population than we would have expected sort of pre-pandemic. And yeah, that's sort of mostly what I have to say about the working age population. So I'll pass it back to you, Rob, and we can maybe answer some of the questions.
Yeah, thanks, Paul. I mean, I think you and I both agree that setting immigration policy is going to be particularly tricky in the next few years. We've had 10 years almost of employment growth, and even then, the government was sometimes criticised in some quarters for having migration settings that were a little loose. I think in the next couple of years there may still be pockets of skill shortages where you might say, yes, there's a need for migrants, but having the information to kind of back that up and be able to set migration policy based on it, I think is going to be particularly tricky. And we've had a comment from Jackie here about the RSLGs being set up. I think yeah, they will certainly play a part, I think, in that broader migration debate, as well as the kind of the broader understanding of what's happening in the labour market. Our understanding at the moment is for the next 12 months, the RSLG's main role will be to collect qualitative information about displacements, job losses in each of their regions. and it won't be until about 12 months from now that they'll become kind of what they were designed to be, which is developing workforce plans for their regions, which would then inform welfare policy, migration policy, etc.
Yes, that's kind of an important thing, is balancing off the skills needs that we get from migration and those skills shortages, but also the high unemployment that we have in New Zealand, and sort of look at the skills matches between the local labour supply and the labour demand from firms.
Yeah, absolutely. And we've had a couple of comments about the agriculture, forestry and fishing sector, and a few people mentioning forestry. I didn't want to really talk about forestry specifically, partly because we don't have any specific employment numbers for forestry at the moment, but it was quite volatile before lockdown. I'm sure many of you will remember, even before COVID hit, there was a big fall in forestry prices because basically New Zealand was just exporting too many logs to China. I think we just kind of got a little bit too enthusiastic about that, and Chinese prices fell as a result, and a number of harvesters, and particularly the smaller ones, had to basically stop harvesting their logs. So yeah, there was volatility in forestry employment pre-COVID. And since then, it has remained relatively volatile. Again, it's all kind of based around that Chinese demand, but even on a month-to-month basis, since April, forestry demand for our forestry exports has been quite volatile. So it's hard to pick what's been happening on the ground in terms of employment. So yeah, that's pretty much all we know about forestry at the moment. And you also mentioned seafood. Yeah, that might be part of the reason that we've seen that fall in agricultural in employment. I'm scratching my head to remember how much of that whole employment is taken up by seafood. My sense is that it's a fairly kind of niche sector. So if there have been job losses in seafood because they couldn't operate during lockdown, and perhaps because demand from China has been rather low, I wouldn't expect it to be the lion's share, but I could be wrong about that. Des asks about looking at the employment data. Do we think these figures are reflective of future employment opportunities, or are there other areas of employment that also bode well for future opportunities? Des, I assume you mean the employment forecasts that I was talking about. They certainly do. When we think through our forecasts, it's based on what we think is going to happen to individual industries. And certainly back in April, we were looking at job losses across almost every industry. I think we said education and training might see some job gains because of that rise in the number of domestic students that we were expecting, and that you would naturally expect when the labour market isn't all that buoyant. I think I'm going to be interested to see what our chief forecaster comes out with in our next round of forecasting, because as we've seen, there are some job gains in a number of industries. Construction is one example where we thought we weren't expecting to see job gains anytime soon, but we've obviously seen them. Now, I think what's happened in the last few months has been a reaction to lockdown in a number of industries. So we had lockdown, we had people saving money during lockdown, and we had maybe a kind of a backlog of construction work building up. And in the subsequent months, we've seen people spending their money on home development. We've seen them going on holidays during the school holidays. We've seen a continuation of construction work coming through. Those are just examples, but I think in its own way, probably every industry has had its own reaction to lockdown. And that might have a few more months to play out, but I think that reaction, I think it is starting to dissipate. And as we get into the end of this year and perhaps into next year, we're going to find ourselves in kind of, there's going to be less kind of month to month, quarter to quarter change, but I think we're going to find ourselves in a more traditional economic slowdown. don't forget that even before COVID, we were saying that that economic growth was going to be quite weak over the next 5 years. We just couldn't see where that growth was going to come from, particularly since the main driver of growth that it's been in the last 10 years, population growth through migration, was and had been and was expected to continue weakening. So we were already on a weaker growth path. And I think over the next couple of years, we will kind of find ourselves much closer to that weaker growth path, with the added break of what happened during lockdown, the money that was taken out of the economy, the continued closure of our borders, all of those things putting further brakes on the economy, and therefore continued either very, very weak economic growth, or perhaps even further some declines in economic growth. So it's hard to pick which industries are going to do well out of that. I think we're still fairly confident that the primary industries will do fairly well. We think that the demand for maybe our basic food commodities will continue. There's obviously a downside to the risk of that, with COVID still very much out of control in North and South America, and with a resurgence of cases in Europe. But I've not been reading much about any kind of second wave of cases in China, so that bodes well for a lot of our exports. Okay, we've had a question about the breakdown by ethnicity. I did look at that when I was looking at those job losses by ethnicity. I did look at the HLFS numbers. You get different tables from Stats New Zealand, and it's not always easy to kind of match them up and see how they all fit together. So I didn't want to mention ethnicity specifically because the numbers didn't quite match up with what we were seeing with the headline numbers. But I would say, broadly speaking, yes, there were a number of job losses among Māori. In fact, I was a little bit surprised. What the HLFS was telling us was that job losses amongst Pacific people seemed to be a lot higher than we would have expected. Kind of similar numbers to Māori, even though Pacific people make up a smaller share of the number of people in employment. So with job losses of similar numbers, you would say that proportionately Pacific people were seeing greater job losses than some of the other ethnicities. And we've got a question. I've not read any of these questions yet, so I'm just going to have to read them on the go. Those initial healthcare job losses, this is from Rachel. GPs during lockdown face significant income drop. Yep, people not getting sick or coming in. Perhaps they were cutting back on some of their administration roles. That's a really good point. And a number of significant number of GP practices and specialist practices are seeking business support from the government. That's really interesting, Rachel. Thanks very much. Hendrik, question around the construction employment numbers. They look very positive. How do we get these numbers and figures? Well, the past employment numbers that I was showing you, Hendrik, that was from those monthly employment indicators that are published by Stats New Zealand. So that's based on people, employers basically submitting their returns to IRD on a monthly basis. They have to include in those returns the number of people that they've got employed. And so Stats New Zealand, as an experimental series, have been drawing on that data and publishing those monthly employment indicators. So that's, I wouldn't go as far to say that they're official figures in the way that the Household Labour Force Survey gives us official employment numbers. Those monthly numbers are a experimental series, but they are based on hard data that employers submit to IRD. Hendrik also says, I'm a recruiter. I'm in the past in an agency and currently working in a large construction company. Never seen so many people looking for work and have no work currently. Okay. Also seen more projects being postponed or cancelled than ever. these numbers just don't feel accurate to what I see in the labour market. Yeah, it's always interesting when what you're seeing happening isn't fitting with the numbers. I would say that perhaps what you're seeing, Hendrik, might be a sign of things to come, that we've had that reaction post-lockdown in the construction industry, but looking further out, as business confidence and consumer confidence remains weak, as the job losses start to mount, businesses will put a lot of their construction projects on hold. And so although the picture at the moment nationally and perhaps in a number of regions might look quite rosy, our forecast for the construction industry is still relatively weak.
There's just another follow-up question from Hendrik, where he asks, would they include people who were made redundant and currently get the subsidy? Thanks.
Yeah, I think so. I think if you mean the wage subsidy, there's also people being made redundant who are getting job seeker support and the COVID income payment. That's all come to an end now. I think all the wage subsidy, as you know, has come to an end. The COVID payment and the COVID income relief payment can still be, people can still claim that up to the end of October. I had a quick look actually at the MSD numbers and those benefit numbers just before I came on here, and just in, I think we have numbers up to the 17th of September, and actually for that week of the 17th compared with the week before, there's actually a fall in the number of people claiming those COVID income relief payments. We don't know how many people in the construction industry are being supported by that wage subsidy. We're trying to get a breakdown of those wage subsidy numbers by industry. It'll be really interesting to see that. But yeah, as we've been saying all along, a lot of employees are being supported by that subsidy, and we are expecting job losses to rise around kind of October, November, with the effects of that subsidy coming off. Another question, how quickly do you think things will return to business as usual? Good question. I mean, it's kind of fair to say that there's going to be a new business as usual. And some people are saying that the golden age of international travel is over and will never return to the kind of tourism numbers that we've seen in the past. Other people are saying that perhaps we don't want to return to those kinds of tourism numbers, international tourism numbers that we've seen in the past. I think just in terms of that international travel, I think it is going to take a while for people to feel confident about traveling again. But looking at the economy as a whole, our forecasts really from back in April, our forecast said that the size of the economy would probably reach pre-pandemic levels again by about 2023. But if you consider that without COVID, the economy was expected to continue growing, we think that even out to 2025, where that's the kind of the extent of our most detailed forecasts, we don't think the economy will be as big as we would have expected it to be had COVID not happened. So in terms of that kind of return to BAU, it's going to take longer than that. In terms of when will we ever get back to kind of functioning normally as a nation, that's not probably an economics question fully, but I think things have changed irrevocably. I think a lot of industries will get back on track in the next couple of years, but I think there's going to be a new normal. I was, for example, listening to Talkback Radio like yesterday afternoon, and they were discussing or debating sick leave, and there's been talk about increasing the sick leave allowances. Now, a lot of that's driven by the fact that businesses and people are more aware than they've ever been before about coming into work with a cold or the flu and how that affects other people, how it infects other people. I think COVID has made us more aware of that than ever before, and I don't think we're just going to go back to how we were pre-COVID. I think that's an awareness that we have in our society now that is going to be the norm. So in many ways, I think there will be a return to BAU. I think economically speaking, it's going to take at least 3 years, probably longer. but I think it's a fair point to make that there's going to be a new normal, and we're never going to go back to the way things were before COVID. Just scrolling down the questions. Do you not expect the government investment in construction and infrastructure to help keep the sector buoyant? Yes, our construction forecasts have always taken into account what we've seen, the promises that are being made for government. But just remember, there's a whole construction industry around residential and non-residential construction that is purely based on the private sector. So government construction is one industry where government can have a very significant and a very direct impact, and we do take into account that infrastructure spending. There's still a question in our minds as to how quickly the government can get that money out of the door. If there's one thing that this current government hasn't been great at, it's getting the money spent. Lots of promises, but not so much in terms of actual holes being dug. So there's still a question as to how much of that promised money is going to get out of the door when it needs to get out of the door, i.e. in the next year or two. But yeah, there will be a lot of support. But government on its own can't keep the whole construction sector afloat. We're running out of time and I'm running out of voice. I'm going to just take one more from Phil. Hi, Phil. With 350k people coming off the wage support by Christmas and the borders closed, could unemployment figures be even higher than projected? Yeah, I feel like we're in a funny point with the unemployment numbers. It's very hard to forecast unemployment because, as I said, you're not just looking at job losses, you're having to predict people's attachment to the labour market. I think things have been more positive in the last few weeks and months than we expected, and that's why we are taking a more cautiously optimistic view of what's going to happen to job losses. But our view is that even before Christmas, we'll see some job losses rise because that wage subsidy has come off now. We think some firms in some sectors will try and get through the busy Christmas period and try and retain as many staff as possible. But going into next year, unless there's any further support offered by government in the form of a wage subsidy, then we do think that job losses will start to rise. And how fast they will rise compared to our forecasts, we're not sure. We're making the best forecast that we can at the moment, but I think we'll have a better idea of how things are panning out once we get more kind of quarters of data. So I think that September quarter HLFS data will be really important, and then the 2 quarters following that will give us a much kind of better sense of the trajectory that the economy is on and the trajectory that those key industries are on, Phil. Okay, I'm going to bring things to a close. Thanks so much for your attention. Thanks very much for your questions. We do hope that you found all of that useful, and we do hope to find you back here again in a month's time. This webinar it has been recorded, and it will be on the usual place on our website. So anyone who missed it or missed part of it, you can go back and listen to it probably in the next day or two. Thanks very much. Bye, everyone.
Thank you.